The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
All right, let's have a live look at Bitcoin. Wake Bitcoin up when September ends. It's October for Bitcoin right now at $47,348. Bitcoin up about 9% over the past 24 hours. And the CoinDesk Ether price ETX index is at 32.28 right now, up about 8% for the day. And looking at the new DFX, CoinDesk's DeFi index is at 582. DeFi also charging ahead over 8% for the past 24 hours. And joining us now to discuss the crypto markets is Ben Cookshank, head of Flourish, a subsidiary of MassMutual. Hey there, Ben. Thanks for joining us. So taking a look at what is behind this rocket fuel that is driving Bitcoin up today.
I wish we could say. I'll say from our perspective at Flourish, we work with financial advisors and their end clients. And as a matter of perspective, advisors tend to be much more long-term buy and hold strategic investors. And so while I think it's always exciting to see price action, certainly the day after our launch of a brand new cryptocurrency solution, I think your guess is probably as good as mine as to what's driving the news.
So yes, I know it's kind of anybody's guess, but there are just a few kind of theories out there, and I'm just curious what you think of some of them. So in terms of Bitcoin's jump, one is these comments by Powell saying that the US is not going to ban Bitcoin. The other is the fact that it's October 1st, and apparently some people think that September is really bad for Bitcoin. I don't totally understand that theory, but it is one. There's I don't know. Do any of these seem like they're playing a role in Bitcoin's jump?
I think momentum overall has quite a lot of importance in cryptocurrency in general. And maybe I'll be the first to say I might not buy the September-October hypothesis with any asset class. If you're dealing with 10 years of data, 10 Septembers, 10 Octobers, plus or minus, it's pretty hard to make a long-term determination on whether that's going to drive price movement. But I think it's always the accumulation of factors. And so positive signals from the Fed, new entrants into the markets, potentially some positive exchange activity. Certainly, again, when you talk to financial advisors, it's the accumulation of those types of factors that make them more comfortable about the asset class, and that's going to apply to institutional investors, retail traders of all kinds.
Mm-hmm. Ben, and also MassMutual has Flourish, the subsidiary, and you're announcing today the launch of a crypto investing platform. Tell us a bit about that.
Yeah, absolutely. To take a step back, our mission at Flourish is to provide financial advisors with innovative access to financial products that help them secure their clients' financial futures. We have an existing platform already working with thousands of financial advisors, tens of thousands of clients. And one of the key observations we've had over the last few years is that the advice that financial advisors are able to give can often be really constrained by the actual products that they have access to, which makes sense. If you're an advisor, hard to give advice on something where you don't have the right product. Nowhere has this been more evident than the world of cryptocurrencies. Crypto has emerged into a multi-trillion-dollar asset class, tens of millions of Americans already investing. Yet, when you speak with financial advisors, they often feel like they've been completely left on the sidelines. They don't actually have the right products to efficiently access this new asset class. When I speak with financial advisors, dozens over the last few months, typically hear that they're limited, their options are limited to really three bad choices. Number one, they can ignore crypto. Number two, they can send their clients to a retail exchange or some other trading platform, which is very problematic for a financial advisor who otherwise helps their clients with every aspect of their clients' financial lives. Losing sight of those assets is really a problem. Or number three, they can put their clients into one of the funds that are out there. Complicated financial products might be appropriate for certain investors, certainly, but come with some well-publicized drawbacks, premiums and discounts, liquidity restrictions, things of that sort. And so with Flourish Crypto, we're providing financial advisors with a simple, secure, and compliant direct cryptocurrency investing solution specifically built for financial advisors. Advisors can't work with the existing retail exchanges. It doesn't work with their technology. It doesn't work with their regulatory requirements. It doesn't work with their business models. And so with Flourish Crypto, a direct cryptocurrency investing solution, but integrated into the financial advisor's entire ecosystem.
Do you guys handle, so, several months ago, MassMutual bought about $100 million in Bitcoin. Is that under your umbrella there? Are you guys managing it? And if so, is it just in Bitcoin? Are you expanding outside of Bitcoin to ETH and other alt currencies?
We actually were acquired by MassMutual in February of this year, and MassMutual's publicized purchase of $100 million in Bitcoin was, I believe, in November or December of last year. I will say when we joined MassMutual, we were thrilled to find that they had a similar view of the potential of cryptocurrencies as a transformative piece of technology. They actually just authored a blog post you can find on flourish.com outlining MassMutual's views on the world of crypto. With that said, we are a very standalone division focused on financial advisors, and so that their general investment activities don't fall under our purview. In terms of our solution, we're offering support for Bitcoin today, and then likely expect to add support for Ethereum in the coming weeks or months. That's really based on the feedback we're hearing from the financial advisory community. Financial advisors are being asked by their clients about Bitcoin and ETH and often looking for a solution. At the same time, you can pair that with recent commentary, or certainly quite a lot of commentary by the SEC, the primary regulator of financial advisors. Their staff has made pretty clear that Bitcoin and Ethereum are not securities, have not given similar guidance for really anything else in the cryptocurrency ecosystem, often the contrary guidance. And so for advisors, with their primary regulator being the SEC, it's important to stay often within what the SEC has already commented on, or their staff has commented on.